The Reserve Bank of India has released a draft report which proposes to extend the trading hours for the currency markets. The report suggests that Forex trading be extended from 9 a.m. to 9 p.m., both for exchange traded and over-the-counter markets. Timing for call money markets too may be extended till 6 p.m. However, the report does not propose an extension in the trading times for government securities. To discuss these draft proposals, joining us on the phone line is Sajal Gupta, Head of Forex and Rates at Edelweiss. Mr. Gupta, thanks so much for taking the time to speak to us. I think the crux of the story comes down to the FX markets more than anything else, so I'll focus on that. This is not a new demand, but the RBI puts out a whole lot of data, particularly from the offshore markets, to justify the need for extended trading times here. Do you agree with that?
This is an old standing demand of the industry and market participants. And that's why you see that most of the Indian traders or Indian companies look for overseas venues to hedge their exposures post 5 o'clock in India. In the sense, if you still look at other currency pairs like euro, pound, yen, they trade almost 24 hours and 5 days. It was anomaly that India, being the sixth largest economy in the world, and we only operate from 9 to 5, is kind of primitive times as we talk about.
Mr. Gupta, so I think, the RBI put out data on the offshore markets, and this is something that's been talked about. We'll get formal data, when a survey from the BIS comes out later in the year. But it is very clear, and I'm sure you, through your clients, also get a sense of how the volumes are moving offshore increasingly. But the trading timings will sort of be one part of the solution to that?
Clearly. In the sense, anybody who can't access markets post 5 o'clock was looking at avenues overseas to hedge their exposures. So if a U.S. client, so suppose an Indian client who is exporting to U.S. gets an order post 7 o'clock, 7 p.m. in the evening, he has no venue to hedge. So he would look at overseas subsidiaries where he can hedge in NDF or DGCX or SGX. So primarily now those type of clients can hedge in India itself. So I think it's clearly, in the sense, a lot of offshore volume may shift back to India. And you have a better control on the Forex markets in that case. Otherwise, what is happening is that 40 to 50% of the volumes which gets traded in FX gets done on overseas markets. And that primarily reduces RBI's capacity to control the Forex rates in onshore country and monitor the same.
True. Mr. Gupta, should the RBI make this a final proposal and the timings actually get extended, what will be the procedural issues that will come up? Will there be more on the exchange traded side or the OTC side? What do you see as the hindrances?
Hindrances can be in terms of payment settlement and all, in terms of margin requirement on the exchange or on the bank side, because RTGS timing and NEFT timing also needs to be extended in case there is a volatility in currency. But I think that should not be much of a concern, because even today, in the sense, commodities market trade till late in the night, and we are managing the commodity risk pretty well, commodity being more volatile than currencies as of now. So should not be a concern, but yes, gradually our payment systems and other systems needs to get aligned to this.
Also staffing, and particularly given the role of PSU banks in the Forex system, sir, do you think that will be a hindrance as well? And I think the RBI mentioned that within the banking sector there are divided views on whether we should go in this direction or not.
Yeah, I think that always is a concern when you go towards more liberalization. But you have to look at it from this side, that primarily you will see more job opportunities being created. In the sense, obviously you can't expect a dealer to operate from morning 9 to evening 9. So maybe you will have two people, one coming at 9, going at 6, another coming at 12, going at 9. So maybe you will have more employment opportunities. So the positive side is this, and obviously there would always be hindrances or reluctance in terms of operating longer hours, in terms of both from banking and broking side, that you have to put in more manpower. But I think ultimately we will reap more rewards once the volume shift from overseas to Indian markets.
So there's been no recommended timing change on the government securities markets. That makes sense because that's still largely a domestic market, right?
Correct. Forex is more international and more correlated with global markets. So, but ultimately, in the sense, even the GSEC market needs to have extended timings. In the sense, broadly, if you look at globally also, the market hours are much more longer than what they are in India as of now. And it's a long-standing demand from customers and market participants.
All right, Mr. Gupta, we'll leave it there. Thank you so much for that quick view. These are just draft recommendations. We'll see if they get finalized.